For the next session, it's going to be, I would say, an approach or I would say an overview of what could be or what are the cryptocurrency assets. We don't really know what they are, but we all know that they are there. I wanted, or I was asked to do something which is maybe a little bit more interactive than the previous one. So if you have some answer, I think it's interesting, or if you have some thought, because we all know that it's a young market, this crypto market. We may all have views on whether that's a valuable investment solution for the future or not. And I think the idea is to get some sense of what's behind this crypto thing. So to start with, I just wanted to have a reflection on what is money, because a lot of people are saying, well, crypto might be money. At least a lot of central banks are asking these questions, and for good reason for them, because potentially that could be a game changer for the approach of money as we know it. So money basically is a medium of exchange, so I can buy a good or a service using a money. Can I do that with Bitcoin? To a certain extent, yes. For example, in our ICO that we've done, we've paid for a lot of marketing stuff using cryptos. So I bought some services using cryptos. Of course, if you want to go and get a sandwich using crypto, that might be a hard thing. But in Paris, if you go in Paris, around the house of Bitcoin, you can go and get a coffee around the house of Bitcoin and pay it in Bitcoin. So that's feasible, even though it might be difficult. Is it a storage of value? Yes, absolutely. As long as I can exchange it against something else, that's a storage of value. Is it something that I like it as a storage of value? It might be a little bit volatile to store my value. But if you had store your value beginning of 2017 in Bitcoin, you would be 1,700% better off at the end of the year. So yes, it's volatile, but volatility is not always in the wrong direction. But it's true that to store your value, or at least all the wealth that you have accumulated over the years, it might not be the right vehicles because for the moment it's too volatile. But you can still store some value there. And then is it a unit of account? Yes, because you can price a service or a good using Bitcoin. When we bought some marketing advertising, basically that's what we did. And by the way, we were priced in dollars and we paid it in Bitcoin. Behind the crypto market, what's behind? And I think that's a fundamental thing that you have to keep in mind. What's behind is the blockchain, because the crypto without the blockchain doesn't really exist. And what is the blockchain, or what is a blockchain? Because you have a lot of them. Basically, that is a distributed ledger, and that's nothing else. So you might say, well, it's not a lot. Yes, but you have a lot of properties associated with these ledgers, which are quite interesting. First of all, it's distributed. So it doesn't exist only in one place, but it exists in a lot of places. You can put more or less what you want in this ledger. So some blockchain put just some payments, like the Bitcoin blockchain. Some blockchain, like the Ethereum blockchain, put some code, what they call smart contract. Whether they're smart or not, that's for everyone to decide. But what you can put on the blockchain is some smart contracting. And if you think about the Internet of Things, where basically you will have objects contracting with each other, that's very useful. That's very useful. Second, you have the use of cryptography behind the blockchain most of the time. So it gives you, let's say, a sense, or it gives you some comfort regarding security and regarding the fact that it's very, very difficult to alter or to hack the blockchain. Usually what happens when there's a hack, it's not really the blockchain who is hacked, even though it may have happened in the recent past on the Bitcoin Gold. Usually what is hacked is the user. And that's where let's say the fragility is in this system, is the user. Because on some occasion you think that you're, let's say, on Ether Delta, whereas you're not on Ether Delta. You're on another website, and someone's behind this. And then you have, in the blockchain, you have centralized system and decentralized system. Most of the people, when they think about blockchain, they think about the Bitcoin, which is a decentralized system, i.e. the information is spread over several thousand nodes, what they call nodes. And basically all the nodes take care of the blockchain, and basically you have what you call the miners, which will be the one who will validate another block. Because a ledger, you need to fill it in. And to fill it in, basically you add another block, and then there's a process, a protocol to add another block. And that's where also you use cryptography. So now we can start to think about what is a crypto asset that is usually associated with the blockchain. So for example, Bitcoin is associated with the Bitcoin blockchain. Ethereum is also associated with the Ethereum blockchain. But you might have some assets that are not necessarily associated with a blockchain. For example, if you do an ICO, you ended up with a token. A token is not a blockchain. Is using a blockchain, but it's not a blockchain. So I think one of the most, or the big difference between a crypto and a fiat is that a fiat usually is backed by a central bank, whereas a crypto, especially in a decentralized blockchain, it's backed by the people who are using the blockchain. So it's as if your central bank basically was, the power of the central bank was given back to the people, which is quite nice, in fact, if you think about it. First, a central bank in the end is backed by the people in the country in which it exists anyway, at least through the income taxes. So without really knowing it, basically, we're all backing our central banks. Except that we don't really say this, and except that in the central banks, you have people that are not elected, that have all the powers, basically, to make some decisions, good or bad, without true or real accountability. In the blockchain space, basically, the people own the money, own the system, and basically, that's a collective approach. So you can see that it's an interesting thing if you think about it. Second, in the fiat world, basically the money doesn't really, or your money and my money, we don't put this with the central bank, we put this with the banking system. And basically the bank have all the power to tell you if it is really your money, or whether they will say, well, I won't really allow you to use your money. I might be bankrupt, or there must be a bank run. For whatever reason, they say, well, there's something suspicious with what you're doing, so I'm not going to transfer your assets to somewhere you've told me that I should do. So they can froze your account, and that's real. It cannot happen in the blockchain world. You are the true owner and the only one owner of your assets, and you can do whatever you want. So this is, let's say, a system that is really, let's say, the empowerment of freedom. And that's really an interesting use case, because I don't think in history you have had this kind of use case for money. Of course, there are a lot of drawbacks and difficulty, and it's not always easy to use. But you are the true owner of your money, and you can do whatever you want without anyone blocking you from doing that. Apart if you lose your secret key. But then that's like if you were to lose your Visa card to pay for something. And then the last thing is that in the fiat world, there's a KYC and AML everywhere, and for good reasons, which is not the case in the blockchain because, for example, a miner, he can mine Bitcoin, he has Bitcoin, he won't have to tell where the Bitcoin is coming from, and he might still use it. So there's less oversight on what the people own in this new world. And that's why I think it's quite frightening for both governments and central banks, and even banks, to be honest, because they have less power over the people. Because in the true world, basically, these entities, they have access to whatever you do. They can block you whenever they want, and you have absolutely no right whatsoever. Yeah, you can always go to court, but if you can't have access to your account for 2 years, it doesn't really matter to you because you have to pay the bills every day. So that's an interesting case, and I think that's why it's quite controversial, apart from the fact that at the beginning of this crypto thing, there was a lot of, let's say, association with drugs and all this kind of thing, which might still be the case. But I think what really is frightening the governments and other entities is the fact that basically they would lose a lot of power, a lot of control over what you can do as an individual. In terms of categories of crypto, because everyone knows about Bitcoin, but there are plenty of crypto, and here you might call them assets, currencies, or else. First, you have the decentralized blockchain, like Bitcoin and Ethereum, where basically the decision to add another block is delegated to a wide range of actors, which are called the miners. Then you have something which is closer to what we know, where you have the centralized blockchain, like XRP, which is, I don't remember the name, Ripple, which is basically a centralized organization. So basically here you have someone like the central bank who will say either I validate a block or not, who may delegate this function to a certain number of entities that will be trustable enough. And by the way, Ethereum is more or less going in that direction. So that's another way to look at a blockchain. So that's quite a different approach. And you might use one blockchain or another blockchain depending on the use case that you have. And then the last category, which is I would say, largest category by number, not by market cap, but by number, which are the asset tokens that are coming from the ICOs that can represent, depending on the cases, a utility token, that can represent an asset token, or that can represent simply a security. So there are a lot of discussion around that as to what they are. The fact is they are what some lawyers call legal or unknown legal entity, because they don't know to what, let's say, legal law they should be referred to. And some of the times, or most of the time, these tokens are, let's say, hybrid products between existing legal category, which is difficult to apprehend. And that's one of the difficulty at the moment for the regulators, is what regulator or what regulation should apply to what token. Knowing that when you're talking about one token, from a technological point of view, they might all be what we call ERC20 token. So that's the same technical, I would say, element, or technical entity, I don't know, assets. But then from a legal point of view, that might represent very, very different things. And that's a very difficult thing for the regulatory authority at the moment, to know exactly what they're talking about and whether they should be regulated or not. Because if you raise money during an ICO, and that was our case, is it a sale of product that you're doing, in which case it's not really regulated apart from the Code of Commerce. Is it a security that you're selling? In which case, yes, your, let's say the AMF or the equivalent of the AMF should be looking after this thing, and you have a formalism that you have to go through. That's a very open question. In any case, you have to talk to the regulator just to make sure that you're not falling under the security laws if you don't want to go to jail and if you want to use the money post-ICO, if you don't want to be obliged to give it back to the token holders. A little word on what's the difference between an ICO and IPO. So clearly the ICO is, the acronym is coming from IPO, except that instead of initial public offering, you call this initial coin offering. But behind this, there are a lot of different realities. As I was mentioning, you have different nature of tokens. First one is an easy one, so you might have a security. So the tokens might represent a share or, yes, a share in a particular business. You have some governance attached. You have some revenue attached. So clearly that falls under the security laws. The second could be what they call a utility token. So with your token, you can do things. It's like if you had some kind of money. And you can buy services or this kind of stuff using your tokens, in which case your sale basically or your fundraising is more associated with let's say a sale of digital assets, and that's what we did on our side. And if you do a sales of digital assets, then you pay VAT and you pay income tax. Of course, if you were to issue a security, you will not have this kind of cost. So you can see that issuing a token, even though it might look the same, you have to look what's behind the token, knowing that if you're a security, then you have a lot more formalism than if you're selling a product or a service, which is, I would say, less constrained from a regulatory point of view. Or also, it could represent an asset. You have an asset, for example, you have had some token issuance that were backed by gold and that were not deemed as security. So basically, you were buying some kind of shares into a gold pot. I've talked about the applicable regulation. There's one big trick, and of course, it's an important one. The first one is these token sales are not, I would say, located into one specific area. When you do a crowd sale, basically you're selling your token all over the world. So from a regulatory point of view, it is quite tricky. If you were to sell a security, and that's why everyone tries to avoid selling a security, you would have trouble because basically you would try to sell a security, let's say, that has been structured under French law or UK law, whatever, to people who are living in China, Australia, New Zealand, whatever country you may think of. By the way, in our ICO, I think we sold our tokens to more than 65 different countries. So you have a lot of hassle to go through if you sell a security because you have to make sure that the product you're selling in every single country follow the rules of every single country. Knowing that, on the other hand, it's difficult for anyone to enforce this law because you're falling under the radar for a lot of jurisdictions. Because most of the time, the ICO that you're doing is quite small compared to the various thresholds of this country. But you have a big regulatory issue here. If you're doing a sale of goods and services, and in our cases we were doing sales of services, we were selling licenses, in fact trading licenses. Then you have to ask the question, what VAT regime should apply? Because you're selling all over the world once again. So there are a lot of questions regarding the jurisdiction into which you're selling. And also last point, the ICO usually are for very, very early stage project. It's like if you were going back in the 2000s and you had all these IPOs about internet companies that were basically selling a PowerPoint and asking for millions to the investors. Apart from that, usually in the IPO space, it's businesses that are existing that go through the IPO process. Especially these days, it's more and more difficult to do an IPO without having gone through a Series A, Series B, Series C fundraising. Usually you wait until you have raised and developed something before going to IPO. In the ICO space, it's very, very, very early stage. It's the Wild West, believe me. But it's fun. It's the Wild West, but it's fun. So you can really sell something which is basically what they call a white paper, the equivalent of a prospectus, but without the formalism of a prospectus. But the difficulty, of course, is to first be credible vis-à-vis the community. So how or why will someone give you some money for someone that may not live in the same country, that he may not know? How will he be aware of this project going on, knowing that a few months ago, a few quarters ago, you had very few number of ICOs, so it was quite easy to be seen. These days, you have so many of them that it's very, very difficult to be seen in this space. So you have a big marketing exercise, and it's becoming more difficult because the guys like Twitter, Facebook, and so on, they don't really like ICOs for good reasons or bad reasons. So they basically try to bar you from doing any marketing on this on their platform. But yes, I think the difference is in terms of stages of development between ICOs and IPOs. But apart from that, it's still fundraising, even though in some cases it might not be equity raising. And in our cases, for example, we didn't sell any equities at all, so we still own 100% of the company. We just sold digital assets. So it's as if we had some revenues for the year. Of course, with these digital assets, they have some rights and some goods and services, but we didn't sell any equities at all. How do you make a trade? Yes.
So you talked about the regulatory issues.
Yes.
Concerning ICOs. I'm wondering about the technical aspects. Like how should you picture like someone buying into an ICO?
Basically, you're buying a digital asset which is represented by a token, and you have to cross finger that there will be something coming out of the project behind this token. I'm serious. I mean, when you're buying that, you trust completely, blindly what the people promoting the project are telling people, basically. And you have had a lot of scam in this area where people based in whatever location, and I don't think there is a specific location to point out, where they have raised some money and they've just gone away with the money. And there's absolutely nothing you can do, even from a legal perspective. So that's the Wild West I'm talking about.
What was you did one, right?
Yes.
So on the same page. What was your pitch to people? What was your promise? What did people expect from this?
Basically, our token gives two rights, and we've built basically our project around quantitative trading, being a regulated asset management company. So the first element of our token gives access to the trading signals, and this is already live. So we've completed the ICO 3 months ago, and we've had this running for the last month or so, which in any other ICO you don't see a product before several quarters. So you have access to the trading signals. So some of the, let's say, quantitative strategies that I've developed, you have access if you want. You just need to buy some tokens and register yourself on our platform, and then provided that we acknowledge that you own this token, then you will get the signals, and then it's hard for you to trade. We don't intervene at all. Once we are going to be a regulated asset management company, the intention is to launch investment vehicles. These investment vehicles will follow the trading signals that we are providing. And on this investment vehicle, there will be a performance fee that will be payable by the investment vehicle to the asset management company. And 85% of this performance fee will go to the NPX token holder. So, and that's basically for the people who are not willing to execute the trade, don't want to enter into this the hassle of the execution. We would take care of that, and we would be regulated for that.
So if I'm only buying the signal, what difference does it make if I own less or more of the token?
That's a tricky question, but it's a good one, and we've thought about it. Basically, the more tokens you have, the quicker you get the signal. Premium services or basic services. The reason behind this, I'm going to tell why. There's a limited number of tokens. And if I'm providing more services, if you hold more tokens, and if you like these services, what you will do is basically hold the tokens. And what I'm organizing like this is just the scarcity of the tokens, nothing else. So yes, the idea is that I'm going to try to, or we are going to provide a different level of services, and the more tokens you have, the more services you will have. But the good thing is that you don't have to spend your token to get access to the services. You just need to hold them. So you can always sell them back if you're not interested or if you don't like the service. Yes?
Do you do public sale or private sale?
Both. Okay, how do you make a transaction in the crypto space? Maybe all of you have already traded in the crypto space. Maybe some of you have never. You have basically three ways I think of to make some trades. First, you have what we call exchanges. Most of them are unregulated, but more and more are coming to be regulated exchanges. And if you look at the news, you can see more of them applying for license. Then there is a question to which license they should apply to. For example, the exchange that allows you to convert crypto against fiat. Usually they apply for some kind of banking license because in the end they might hold on your behalf some fiat currencies. So that's the second bullet point. That's the centralized exchange, where basically it's as if you were putting your money in a bank, except it's an exchange, and then you can do trade on the exchange. The money per se is not on a personal account to you, or at least it's in a pool, but there is a ledger which recognizes that you own this and these assets. And then if you want to make a trade, it's quite easy. Usually they have a web platform that is quite friendly, and you do your trades. And in the end, if you want to cash out, you can always withdraw either the fiat, if you have some fiat, and if it's an exchange that allows you to have fiat, or the cryptos, and you can send them whatever you want. But the account that you have is not really a personal account. It's a pool that they have for you. And there is a ledger behind this. So to a certain extent, you have a risk, a counterparty risk, which is the exchange itself. So if you go with Coinbase, which is the largest one, US-based, I think you're rather safe. If you go for a much smaller one, it's up to you, and it's up to you to do the analysis. Then you have what you call the decentralized exchange, where basically the assets are still held within your account. So you have a personal account, a personal address, which they don't have. And then what they do is just organize a trading book. And you basically then use these trading books to make some trades. But you do trade on a personal-to-personal basis. The exchange is just there to collect the interest, either on the sell or on the buy side. And you're there and then you make your trades. Or the last solution, but there might still be a question of trust regarding where your money is kept. There's an element of trust here. Or last solution is that you have your own personal wallet. So it can be just using, I would say, an internet application, or using what we call some ledger keys. If you've ever heard about it, so basically it looks like a USB key, except that it's not. And then everything's on your key. At least your private key is in there. And private key is basically your secret code that allows you to move funds around. And with this wallet, you can make payments or you can receive payments from wherever, completely free. You can travel with it. You can go in any country. If you find a local coin house, the one that we have in France, you can go and exchange some money. You can start, and we have started to see some ATM that allows people having Bitcoin. You come with your Bitcoin and you can get some cash back. So of course they take a fee for the conversion of your Bitcoin into cash, and they limit usually the amount that you can withdraw from this machine. So this is basically the places where you can exchange, convert money. Usually, depending on the exchange you're on, you have access to a limited assets only. So you have to look at what kind of asset you want to trade. If you want to trade Ethereum or Bitcoin on all the exchanges, you will find them. But for example, if you want to trade Ethereum or Bitcoin, that's not the same wallet that you need to hold. With the ledger key, you can have both wallets on your same device, but that's not always the case. If I, for example, design, or if I set up an account with my Ether wallet, I will not be able to design or to design a Bitcoin account using this application. I need to have another application dedicated for that. So at the beginning, it's quite complicated, but it's not that complicated. What you have to be just careful of is holding or keeping this private key with you, because that's really let's say your safe, if I may say. So you have to be careful not to leave it, I would say, somewhere where someone could get hold of it. And that's about it. Yes. There is one which is quite famous at the moment, which is IDEX, IDEX, which has a fairly amount of volume. And you have had some ICOs which were around launching decentralized exchanges. There's a lot of debate at the moment in the crypto community as to whether it makes some sense to have a centralized exchange versus decentralized exchange, knowing that from I would say a philosophical perspective, they'd rather have only decentralized exchanges than centralized exchanges. That's more part of their philosophy of having a decentralized approach, especially on the blockchain and Bitcoin. So I think they want to have this. The only issue for the moment is to find the right level of liquidity. So maybe at some point you will only have decentralized exchange, knowing that if you have a centralized exchange, basically the fiscal authority can go after you. If you have a decentralized exchanges, they can't. So they're coming from this, I would say, part or this history, which is they are fighting to a certain extent the authorities. They've built basically a system around this. And the difficulty will be for mass adoption, it will be difficult to be completely against the existing system. So there's a philosophical debate around decentralized exchange versus centralized exchange. And I would say the hardcore crypto holders prefer to go on decentralized exchange because it's, I would say, less public and they can do whatever they want, which is not the case for the, I would say, the new joiners. The issue on decentralized exchange is that you can't convert your crypto into fiat, because to do that you need some kind of licenses. But you have also some guys who have set up ICOs in order to try to convert your Bitcoin or your Ether against cash. I think there was a project which was called local Bitcoin, where you could go and go to an individual. So basically, the application would connect the two of you and convert your Bitcoin with some cash on an individual to individual basis. And I think that's the real revolution for me. It's the fact that provided you have the right tool, you can really connect people directly without any intermediaries, which to a certain extent is good because first, intermediaries cost some money. Yes, they provide some kind of security and this kind of thing, but they cost a lot. And it allows you as well to basically connect people all around the world. So that's the kind of philosophy that you have behind.
But is counterparty is the same between centralized and decentralized?
No, because in the decentralized exchange, you own the money. In the centralized exchange, you have deposited your money with the centralized exchange. But usually these are bigger exchanges. So
yeah, but in the transaction, so in the decentralized, is it also, let's say, delivery versus payment, or
yes.
It's outside? No, it's on the exchange.
Yes. Yes?
Do you think, I mean, there's lots of different cryptocurrencies. Do you think that anyone will dominate in the future? What's the future?
When we talk about currencies, you have to be careful, whether it's currencies or it's assets. Is a currency attached to a blockchain or not attached to a blockchain? For me, when you talk about currencies, you're talking of a crypto that is associated with a blockchain. So you have a usage of this blockchain. I think the value of your currency in this case will depend on whether the blockchain will be widely adopted or not. So it will really depend on the true business cases that you have behind. I think Ethereum for that is an interesting use case because of what we call the smart contract that they allow you to run. And basically that allows automatic or automation of a lot of processes in corporates. And I think that's a very good use case as a blockchain for the future. The only issue is that any blockchain can be replicated. It's open source code, so everyone can replicate. Whether it is adopted or not by, I would say, by the one who will truly use the technology, I just don't know what the future will be. But it's true that it's a competition in terms of technology, but also in terms of recognition. And so far, what has happened is that the first mover in the market are the biggest winner. Whether it's going to be the same in the future or not, I don't know. But it is likely, I would say, if we look at what history can show us. Yes, but its use case is quite limited to only payment. So my belief is that you will have blockchain that will be dedicated to use cases. And depending on I would say, the vast adoption of these use cases, the blockchain will develop more or less. You could think of Amazon that they could sell or they could set up their own blockchain and basically force everyone to transact into their Amazon coin. I think Facebook is considering doing it. So all these big social network, or in Amazon, it's not a social network, but it's an internet company. There might be some use cases around that. Whether it's, I would say, a focus on the particular company that is setting up this blockchain, or whether that's something that could be, let's say, widely spread or widely used in the world. I think that's what will decide whether it's a successful blockchain or not, and a cryptocurrency associated.
Just this cryptocurrencies, I never really, I still don't actually. What's the attraction? It doesn't provide any convenience, really, does it? Like, what's, why would I use it? Why would I want to go into crypto space with my money when I can go to a bank right now and say my.
Okay, I'm gonna tell you an example. I'm going to tell you a small example. in the transaction, in the ICO that we've done, we have had to pay a lot of people all around the world. If you want to pay a small guy in Russia in 15 seconds with your bank account, good luck for that. With the Bitcoin, I have his address, I have my money on my Bitcoin key, and I can send within 15 seconds. No one will ask any question. There will not be any blockage. For example, as a company, we are trying to pay Bloomberg because we have bought the services of Bloomberg. Every month, we fail to pay them in US dollar because we have a euro account and there's something going wrong. It could not happen with the Bitcoin or with Ether. So there's a convenience in the usage of money. It's very, very, very easy to use, and it's very, very quick. The cost, I'm pretty sure, is much, much lower because basically what I have to pay is just the gas fee to make a transaction, which is less than 50 cents. With your bank, if you want to make a transfer in another currency, in another country, I'm not so sure you would pay only 50 cents.
If you want to use it just for UK, for example, is there any benefit?
No, if it is within the UK, apart from the, I would say, the rapidity into the payment, because even if you make a bank payment from a UK entity to another UK entity, it might take a day. Cost-wise, I don't think you would have to pay. I think if it is an internal payment, but from an international point of view, it's much easier.
And one more question. You say that you keep your key on the ledger key.
In fact, the ledger key keeps it for you.
So if you lose it, is there any way that you?
Yeah, of course, you have what they call a passphrase. 24. No, it's 24 words that you have to record when you set up your device. You put this in a lock, and then if you need it, you can use this 24 passphrase and reset a new ledger key, and then you find all the.
Basically, you've got like two passwords. One is the ledger key, and one is that 25.
Exactly, and we've done it once, and it's working pretty well. Yeah, that's basically the backup. Otherwise, it's lost. There's no way you can guess what was the password.
I read statistics somewhere that like 40% of the people that have cryptocurrency, they lost their...
Yeah, in the past, yes. Some because they have do some mining and they've lost their hard drive or this kind of thing, and it happened. Especially at the beginning, it was not that much valuable, so people who were not really caring about losing the hard drive. I think if they look at the price now, maybe they start to care a little bit more. I remember a story where basically you had a guy who was married, I think, and basically his wife complained because he was spending too much time on the computer mining. So at some point he had to throw away the computer in a trash. It was this or divorce. And basically, when he heard about the value of the Bitcoin, I think he did everything that was possible to retrieve the computer because it was so much money. So yes, you have a lot of people who have lost their cryptos because they were not really caring about getting hold of the private key.
Just the possibility for manipulation.
It's very high because it's a small market. It's very high because it's a small, unregulated market.
So I've been thinking about enforcement. So if you're a private individual or a company doing business and receiving payment services or products through a decentralized exchange and it goes wrong, so you either get ripped off or you're not paid or there's some corruption along the way, is there any precedent of cases that have gone to court?
No, that's your risk. Counterparty risk.
So the exchanges don't play a role?
No, it's just a web app, nothing more. So it's for you to lose. I think that's the difficulty of having a decentralized exchange being widely adopted at the moment. But in the end, it might take off, and you might have one that will really emerge and will be the one, and everyone will live happy.
But escrow services?
Not really, to be frank. Usually, and it's more or less the case now in ICOs, regulatory authority asks you to have an escrow services. It doesn't really exist because basically anyone holding the private key owns the account. So if you have one account and two people basically has the same or has the private key because they want to share it, it's difficult from a legal point of view to say who the account belongs to. In fact, you have an issue regarding ownership, because an account is no more than a public key that everyone can have access to, and a private key. If three people owns the same key, who the account belongs to? You have no declaration. There is no association of the account with a name, an address, and this kind of thing. That's a tricky one from a legal point of view.
I think that gives another advantage or disadvantage to look at to why people use cryptocurrency, because it's untraceable. So you mentioned about sending money within the UK or abroad. There's a complete, like, nobody really knows who owns it, and as you said, there's like no legal sample from it.
The only link, yes, the only link with the real world is when you do a conversion. If you don't do a conversion, yes, you can see the money going from one account to an account, but you don't know. Yes, but you don't.
The guys from Silk Road never took. He had millions of dollars worth in Bitcoin, and he was living in a shared room because he knew really well that the time he was cashing out his Bitcoin, they found it.
Yes, but
So
nobody.
It's public. You cannot modify. You cannot control. So exactly the opposite or not traceable. If you want to do something traceable, you do the good old going bank in Switzerland or Panama or anywhere.
Yes, but you can't associate a public key with an individual, apart from Satoshi, because he is.
No, everyone is. There are a lot of companies that make cryptanalysis, and they actually been able to, with 99.999, to trace and understand all the pattern and who you are. And the police and the law enforcement know really well that is why you can do it, but it's public. You have all the information that you need, and you cannot change. So actually, when you start to do it...
I'm not sure you have all the information, because, for example, if I'm new, I would say buyer of crypto, usually what I do is I go to an exchange, and nobody exchanged the information between the exchange. So that means that you will need to know...
Most of the exchange now that they ask you to verify at least your email.
Yes, of course, but they don't share this information with the wide public. They don't share this information. Yes, but they don't share and they don't give this public information.
When you go to a bank, you have to cash out to a bank. There is an entity that has set your Bitcoin. You have to
Yeah, but nobody is able to gather all this information in one place. It's true that you can trace, but nobody can do this with.
That is wrong. So a lot of people can do it, and as I mentioned, law enforcement do it. We work with that.
Yeah, okay. You're the French authority, and my account is in the US. What authority do they have to go to the US?
If I'm able to, depends that if you want to trace some illegal activity with the normal bank system, you need to prove that the people is doing something wrong. With the Bitcoin and any other public blockchain, the proof is done. So I only have to find a way to connect the last step with the last thing that I'm doing. So it's actually much easier. I'm not saying that is, everyone can do it. But whilst before we don't have any proof, and the only way to do is to have some leaks and someone that was going to law enforcement maybe say something. Now all the steps, despite the last and the first, are public.
Yes. Okay. But if I'm going with no, if I'm going in the street and I find somebody who is willing to do a cash against Bitcoin transaction.
How can you do that?
For whatever reason, I'm waiting.
I'll say, how can you do that? If you made an example, can you explain how can you do that?
Of course I can do that.
You still need
I completely.
You still need to move the Bitcoin, the blockchain. Otherwise,
Yes, but can somebody associate this Bitcoin with me? No.
Yes.
No.
Yeah, because
No, it's a peer-to-peer transaction.
It's a paired document.
It's a peer-to-peer transaction. Yes, but it's not associated with my account.
I mean, if
I know, because
I give you a coin to somebody, that doesn't say a name of
But the other guy will get the Bitcoin. I can trace back to
Yes,
all the things.
yes, you know that the Bitcoin has been transferred. To whom it has been transferred, you have absolutely no clue.
With the same thing, because sooner or later you need to get out.
Yeah, if I don't go out, you can't know.
You are reaching in Morocco, you say you cannot use Bitcoin outside. So, well, why I should,
But because I can buy some services using
why
Bitcoin,
should spend my $6,000, $7,000 to have a Bitcoin if I cannot use it?
you can use it, but you may not have to use the banking system to do that. I can buy services using Bitcoin, and nobody would know.
You are traced. And this
Yeah, but it's not associated to an individual people.
try to do it. I really try to do it and verify how long they take to get to you, to come to you.
No, I know that I can do.
No, I'm pretty sure. So,
I know that I can do it. Okay.
So with these kind of transactions, then if you can't identify the individual, then you wouldn't be able to trace them for tax either.
That's a very good question. And that's a question that all the tax authorities are trying to answer. Believe me. So basically, yes, you can do some tax evasion using that. The only issue is that at some point, as if Mr. was mentioning, you want to use your Bitcoin and convert it into dollars or euro, you might have to say where the money is coming from. The good news is that if you go to Portugal, and you live there, you're a tax resident of Portugal, you don't pay any tax on any, I would say, gain that you may have on your cryptos. So you do your business in the UK where you should be taxed. You say nothing to the tax authority, which is wrong. You should not do that. Then you leave to the Portugal and you can cash out, no tax, completely legal.
But there's still money laundering, right?
No.
No money laundering.
No. For example, I'm buying.
The same taxes, right? But if you turn out with 1 million, right? And you try to deposit it somewhere, people have that duty over 10,000 euros to say, where do you get the money?
You can say to the Portuguese authority that you started with 1 Bitcoin because you're a very good trader. You ended up with 2,000 Bitcoin, and you can prove it. You can show your record. Hopefully.
Or you need to be true, yeah, of course.
No. If it's true.
It's true if you prove it. It's fine.
Exactly. So that's completely legal, and you can evade tax consequences. Yes.
Regarding the ICOs, what's the average size of an ICO? And once I've got tokens, can I actually trade them? I think it's a bit
Okay. Average size of the ICO, I think it would be in the 5 to 10 million range, slightly on the lower side of this area. Especially now these days, you have a lot of ICOs, so it's more difficult for a young project to raise money. In terms of trading, usually when you're an ICO, your token is listed either on the decentralized exchange, which is very easy because they list almost everything, or on a centralized exchange where basically you need to make an agreement and make a contract with the centralized exchange. And basically from there, you have access to all the trades that is done on a particular token. Once again, as it was mentioned, it's completely open ledger, so everyone knows the trades, apart from the price. So you know that one token has gone from a portfolio to another portfolio. You may not know the price or let's say the price in fiat that has been associated with this trade. But if you look at the exchange, then usually through API, you can have access to all the trades with the price and this kind of thing. You don't have a duty per se, but we have declared that the different usage that we would do with the money raised during the ICO. So mostly setting up the asset management company, marketing costs, legal costs, technical costs, because we need to build an infrastructure, and of course salaries. I could try and make more money out of it. Basically, that's my money. It's more, let's say, a moral, I would say, engagement that you have with the people who have participated. We want to deliver, that's our take, we want to deliver at least the goods that we have promised. and that's what we've started to do already. But it's true that usually you don't have a lot of string attached to the money that you've raised. That's the beauty, I mean, if you're a fundraiser. But yes.
You know if, I mean, do you have knowledge if anybody is trying to force some sort of contract on this ICO, like, you know, or they got away, I'm trying to sue them, I don't know.
Well, you have had some I would say some lawsuits, especially in the US, for very, very large ICOs. Of course, they don't usually go after a smaller one because you don't have a lot of money to gain. But you have had a lot of, you have had some very popular or not popular, but public lawsuits against ICOs. The difficulty is, once again, you don't have a lot of legal framework when you do an ICO. There is no, yes and no, because, for example, when we sold our ICO, there were some terms of sales for our token. So to a certain extent, people can always look at the terms of sales and whether we comply or not with the terms of sales. And I think there is a way for people to try to sue you if they want. But it's difficult if the guy is based in Kazakhstan and trying to sue someone in France. I think the probability of him winning the case is very, very low. But still, yes, the risk exists. And this is something we need to factor. And this is why we're quite conscious when we do things or when we communicate to make sure that we comply with the rule. And for us, it's even more important that we are going to be a regulated entity. So we have also this commitment vis-à-vis the regulator.
Why don't the investors demand some kind of legal recourse? Why are they blindly doing it when it doesn't take much to say, I want something that I...
If the token has gone 10 times above the issue price, of course they wouldn't ask for anything. As long as the price goes down, they can say, well, it's a free option to try to sue the people and see if I do a lot of noise, whether they can refund me. And that's, for them, they see that as an option.
Taking a huge risk because...
But in the end, yes, if they participate to an ICO, I think they have to be prepared to lose 100% of what they've invested. I mean, investing in an early stage company where usually most of the people are only presenting ideas, dreams through a white paper, you have to be a good believer to participate in that, or you are willing to do, let's say, a donation. And some of the ICO are structured as donation, by the way.
I guess the difference there is that if you're investing in early stage companies, you own some of that company, right? So we're talking about venture capital, something like that. I'm not talking about ICOs now, I'm talking about
yes.
investments. So this one, you know, let's say you become, your asset management fees are going through the roof, and you promised them 5%, and now you say, I'm going to do it. They don't have any recourse. But whereas with the traditional investment, they do. So.
I agree. It's to a certain extent, it's a moral, let's say it's a moral commitment on the people doing the ICO, as opposed to a true legal commitment. On the other hand, if you were not to deliver on your promise, you might still be at risk. And if there's some money at stake, I think they would find a lawyer that would try to sue you, and they might win. It might take some time, but they might win.
Is your ultimate goal to run an asset management firm in crypto?
Yes.
You raise some finance.
Exactly.
Then your investors are not holding part of your company, but
No.
they're receiving a service in the way of an indicator and maybe an automated trading signal or part of the strategy. But in the future, is your intention to harness all of your investments that come to you and then run an asset management company?
In fact, there are two, let's say, two rights to our token. The first one is, yes, the trading signals, and you know, if the signals are good enough and you have some decent money to put at work, you will be repaid several times the investment that you have made. And once again, it's an immobilization of the token, because you can always sell them back in the market. So it's not you're not spending them. And the second is a revenue share on the first 10 products that we're going to launch. So potentially they could receive some revenues if we're successful as an asset management company. So they don't own shares in the company. but they do have a right to revenue, which is better than having a right to dividends, because basically the revenues is before all the charges.
So what's the revenue based on, what, profit share? Or?
It's the performance fee, and it's 85% of this performance fee that would be payable to the NPX token holder.
Payable in fiat money or in other tokens?
Sorry?
Payable in...
No, we are still discussing this because there's a structuring element, but the idea was to pay them in the shares of the funds that we would run to avoid having some, I would say, movement in the cash. And depending on whether it is feasible or not from a legal point of view, otherwise it would be a cash. But cash for me is either a crypto or fiat. But it would be, in this case, rather crypto. The idea is to avoid having some kind of mismatch between the payment and the revenues. Yes?
Question. You know, obviously you guys are an ICO raise. Is there a set amount of time which you liquidate what you've raised?
Yes. In fact, we have a lockup period for the tokens that we have kept. And basically what we have done is we have done a staggered release of the token based on achievement on what we're doing. So for example, there will be 25% of the tokens that we have hold that will be released once we get the asset management license, because that was part of what we have sold to the investor. Another 25% will be released once we have launched the first 3 funds, in which case you can demonstrate that you are starting to deliver some value to the investor. The third quarter will be released once we have launched the first 10 vehicles, and the last quarter will be released once we reach the 2 years period.
And do you liquidate those on the exchanges in which you're listing your coin, or is it a discussion?
Basically, for us, we see these tokens as not a revenue, but let's say a share war chest for the company. Yep. So we might not liquidate necessarily the tokens once they are free to trade.
Okay. And obviously, all the Ethereum, I'm guessing it's Ethereum accepted.
Yes.
That you convert straight to tokens.
No, we don't. We have not converted 100% of the Ethereum that we have raised. We are basically monitoring this exposure. For us, this is part of the assets that we own. And as let's say an asset management company in this area, not owning any cryptos, I think would feel a little bit odd. So that's why we have kept some position in Ether and Bitcoin, in fact. But of course, yes, we have converted some of the money pretty rapidly. Because as a corporate, we have some spending to make, and they are made in fiat, not in cryptos. I need to pay my employee with hard cash.
So why do you use Ethereum versus Bitcoin?
First, because usually when you do an ICO, you use a smart contract to do that. And the smart contract, to participate in a smart contract, you need Ethereum and not Bitcoin. So we authorized the subscription in Bitcoin, but it's more difficult from a technical point of view to subscribe in Bitcoin than in Ether. So that's why usually for the ICO, you have 90% of the proceeds that are through Ether, and 10% that can be done through a Bitcoin, or in our case also Euro.
What is the exchange that you guys use?
For what? For the conversion?
Yes.
We are using Coin House, in fact, in Paris. Coin House.
Coin House.
La maison.
The same as Coinbase?
No. It's a small exchange which is regulated in France. But we can also use GDAX or this kind of thing. Basically, we've opened an account with the I would say the biggest centralized exchange, where we can have liquidity access.
So what are the odds the AMF will allow you to engage with personal investors as opposed to institutional investors?
For the moment, it will be challenging to have personal investors being able to participate in this kind of product. Even though if you think about it, when people participate in this kind of vehicles, if they own cryptos, that means that they don't really care about risk. And for the AMF, they have not gone that far at this stage. but that's at least what we are trying to suggest to them, is that people who are participating in this kind of product and basically needs to have Bitcoin or Ether, if they subscribe in Bitcoin or Ether, these are not the guys that they usually want to protect. The guys, the people they want to protect are the ones that basically don't like risk at all. If you own Bitcoin, basically they don't really care about you. But yes, from a legal perspective, having said that, it's still difficult to have a public sale for a fund, even if it is in Bitcoin or Ether. But I'm pretty sure at some point they will bridge this gap. That's a tricky question that we need to answer. Basically, we've met a lot of people since we launched the project. There are obvious, I would say, investors for us. For example, all the what you call whales in this world. So basically, people holding a large bunch of crypto for historical reasons mainly. These guys basically don't receive any return on their crypto. So they might like to have product that yields them something while still keeping this exposure in crypto. You have also the ICO that are not converting straight away, that are basically sitting on a large pile of cryptos and that might want to find, I would say, area where they can get some return. And the last area where we will focus our marketing will be on the family offices and the high net worth individual. These are people basically that can start diversifying their investment base. They are, I would say, quicker in taking decisions because usually it's a few people that you need to convince. And if they want to hedge potentially what might be the future, I think there is an area here to collect some money. I don't think we would find institutional investor in the true sense of the word right away. But the idea for us is to have or to be completely ready when these guys enter the market, if one day they enter into this market, because they won't manage the money by themselves. It's too complicated for them. So they will look for an asset manager to do that for them, and they will need to be regulated, and they will need to have some kind of track record just to pass the normal due diligence process that they may have. And basically, we want to be there once they do that. And in between, basically, we need to live and find some first customer. So the first customer will not be in this space because even though they talk about it, they are far away from being ready to make some investment at this point of time. Well, I think that's it. Thank you very much.